Hello and welcome to my morning report on Friday the 27th of February with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off to a fairly muted start really, nothing too significant really going on today in terms of how the direction is being seen this morning. There's been a slight amount of, certainly the big dollar strength that we saw yesterday is just unwound slightly today. And that is the dollar index that you've had the sharp move high yesterday coming on the back of that inflation data, and also the core, the durable goods that was strong as well. The inflation data slightly dipped into deflation territory, but in terms of the core inflation, core CPI staying at 1.6%, so still fairly solid in terms of inflation there. So that's driven the dollar gains that we saw yesterday. Sharp moves actually impacting across the FX charts today. Or yesterday afternoon, and which has made a significant impact, and I'll talk about all those, talk through all those in a minute, and obviously my chart of the day, which is the Aussie dollar as well. But there is still quite a lot of data going on today, and perhaps that is also driving the fact that we're sort of slightly consolidating early on today. What we've got is first of all, the German inflation, German HICP comes out. Throughout the morning, really, you've got all the regions in Germany announcing their data, but then you get the composite, the one for the country-wide data at 1 o'clock this afternoon. That's forecast to come in slightly better than last month, 0.4% negative is the expectation there. And that's, as I said, at 1 o'clock this afternoon. Then you've also got the US GDP. It's actually that's just the prelim GDP. I apologise for that, but that's at 1:30, and that's expected to come in at 2.1% on the prelim. Now, this 3.9 was the prelim last quarter, so that's not a great chart to actually go by. But the 2.6% was the advanced number. That's the first reading, came out last month. So slightly down that's going to be from the first reading of GDP. So be interesting to see what impact that has on the dollar. And then into the afternoon, you've also got the pending home sales and the Michigan sentiment, both at 3 o'clock. Pending home sales expected to just show growth of around about 2.5%. And the Michigan sentiment, which is expected to improve slightly from the 93.6 flash reading, and that is supposed to come in at 94.2 there. So it's a very slight improvement on the flash number, but not too much. Now, my chart of the day, which is the Aussie dollar. Now, Aussie dollar has had an interesting move. Look at this big downtrend, the red line, the red downtrend here. 1, 2, 3 times it's hit that. Now we've had a fourth, and not only have we had a fourth hit of that downtrend, we've also had a bearish key one-day reversal coming. Now, this is sort of extending a few mixed signals that we've got on this chart at the moment, because we did have a break above the 78.75 resistance on Wednesday, and then that was followed up by again a sharp key one-day reversal. So sort of mixed signal, but certainly that key one-day reversal coming on the fact that we're on that downtrend as well. Also looking at this the stochastics as well, that's rolling over once again. It's a bit certainly a disappointing move for the bulls. And we've got the MACD lines, which are just sort of beginning to flatten off underneath neutral. You've got the RSI sort of losing momentum around that 50 mark as well. So several reasons why this just seems to still just be this a sort of like a bear market rally, I suppose you'd say, and back down towards that downtrend. This is the hourly chart, which shows that resistance, which was probably around 78.50, you'd argue, but 78.75 was the absolute high within that. But certainly looked to be breaking out, but sharp move down backwards. Actually, you're sort of now back into this range once more. So effectively, you're still playing out this range on the hourly chart. But if you started to then break back below the 77.36 mark, I think that would certainly suggest the pressure is back on. But certainly looking at the daily chart, you'd say that the pressure is already on. Although we have had this slight rebound this morning, you'd argue that this the fact that this bear key reversal is coming around that downtrend, also with the stochastics falling away as well. There is a general deterioration in the technicals on this Aussie dollar following on from yesterday's trading. Certainly it looks like the US dollar is beginning to strengthen once again against the Aussie, and it looks like it's going to be pulling this one lower. So watch out for the confirmation of this move would come on a break of that 77.36 reaction low. But until then, you sort of still playing a little bit of this range really, and you no real absolutely decisive signal, but certainly you'd say that the deterioration is starting to come through once again. So if you saw another lower high coming in probably below that 78.50 mark, which is this green line here on this chart, which is a basis of resistance anyway. So if you started to see that coming in, you'd say that maybe the pressure would be starting to build again. Very near-term support at 77.74, but certainly that 77.36 level is the key support now in this chart, and if that did break to the downside, you'd reopen at the lows once again. Okay, so I wish you good luck in your trading on the Aussie today, and I will speak to you later. Thank you.